Well, Fannie Mae is still on the ropes. The mortgage finance company taken over by the government wants Treasury to give it almost $11 billion. That's after an eighth straight quarterly loss, driving its net worth below zero once again. For a little bit more on Fannie Mae's second quarter earnings, we bring in Bose George. He is an analyst at Keefe Bruyette Woods. Bose, glad to have you on set with us. You have a market perform on these stocks, but you were just telling me it doesn't really mean you think they're necessarily a good pick. It's like your neutral rating, right?
That's correct. I mean, we really cover these stocks as a window on the mortgage market. We don't anticipate the common equity ever having any value.
Okay, well, that's a pretty key point. Do they remain publicly listed?
Eventually, they'll have to resolve the issue. The government, we're assuming some pretty significant debts to the government by the time this cycle is over, which suggests that they can't continue in their current form. It's a little early to speculate what will happen, but what we're comfortable with is that the current common shareholders, are unlikely to have any value.
Okay, how much money exactly do you think these companies are going to be in the hole, if you like, to the government?
Well, the current number for Fannie Mae is $46 billion after this quarter. Actually, one gauge we use is their own estimate of what they call the fair value of equity, which was negative $102 billion. And that's a rough gauge of essentially what they expect their revenues less their expenses once this is all said and done. That gets you to roughly $150 billion, which seems like a reasonable number.
Now, the government and the economy, I mean, it needs some sort of mortgage entity, so you can't just kind of take these companies out and shoot them. As you said, I mean, there's a lot of possibilities. What's the best case scenario? I mean, the money they owe to the government is enormous. What can you do now? Liquidate them?
Well, I think liquidating would be difficult. I agree with you. We clearly need those entities. I think that one scenario is these companies have two businesses. They have very large investment portfolios and they're very large guarantee portfolios. They could run down the investment portfolios over time, get them out of that business.
Is that too complicated?
Actually, it isn't, because those portfolios prepay. So essentially all they'd have to do is stop buying anymore, which they've sort of done already. They could let those portfolios run off over time. You might end up with slightly higher mortgage rates, but that's not an unreasonable price to pay. You could have them guaranteeing, still issuing agents MBS, that'll still keep mortgages accessible to people and still help them provide their mission.
So you can utilities.
Yeah, essentially turn them into public utilities.
All right, Bose, we thank you so much for stopping by, especially so early. Bose George there from Keefe Bruyette Woods.
Thank you.